Better to wait for the buy. Just saying, that's the market we're in. Better to wait for the buy. You can find exceptions. This is what gets all novice traders. The but. But look at this, but look at that. Yeah, but why? Since nothing's 100%, you're always going to have a but, right? So if something happens 85%, the but is 15%. Why is the but more important than the 85%? And that's what you got to always think of. Like, look at our Starbucks here. Look at Starbucks. Right? Better to wait for the buy. Now, guys, what do I mean wait for the buy? You got several things here, right? You got, look, you got elephants. You got tails. You got bull 180. So these are your buys, right? And you got RBIs, right? So let's say these are your key buys. Now, what do? You see Starbucks here? Look carefully. Look at what I'm going to explain to you. Now, this is not a buy, okay? I guess you can say this is a buy. Bottoming tail bar there. I want to see a little bit more downside, but here's a buy and here's a buy. So you don't break above here, but you do break above there. So once you get the buy, all right, I want you to ignore what's to the left. Not forever, but for now. That's what you're going to do. Once you get the buy, you're going to ignore everything that happened to the left, and you're going to pretend like you just got a brand new opening day. This is your brand new open. It's the first bar of the day. Oh, that's too big. You understand? It's the first bar of the day. Boom. Play it like it's the first bar of the day. You see what I'm saying? And this will get you out of your confusion. Take JPM. All right. Now, you might get caught like here's a buy here. All right. You get stopped out of that one. I get it. Well, you wait for the next one. And there's the next buy. And you pretend as if what happened before your buy is not there. This is your brand new open. Risk unit, profit reward. You got it? That's what you have to apply today. Does that make sense? That's what I mean by wait for the buy, then ignore the left. Wait for the buy, ignore the left. Wait for the buy, ignore the left. That's the market we are in right now. And you're going to do better. But we will have to be careful of when that changes, because that is not normal and it will not stay forever. But we might still have a few more months of it. That's what I'm saying. You understand? So right. So here, bull 180, right? That's a 2-minute right there. Now there's your play, and you just see how it works. Guys, it's still a numbers game. Not every play is going to work, right? But that's why we have stops. Now, guys, let me talk about stops again. let me take this moment to talk about stops. It's a basic part of trading, but we still need to constantly bring this topic up. Your stop outs should not hurt. I'm going to repeat this 2 more times. Your stop outs should not hurt. Your stop outs should not hurt. If your stop outs hurt, they're too big. Your stop outs should be hiccups like that. Hiccups. But if they hurt, you've got some adjusting to make. You understand? Stop out should be like, oh, all right, okay, this one didn't work, but I can get that back. They should induce this, I can get that back, no big deal. They shouldn't be painful. They shouldn't be great disappointments, just hiccups that are easily recovered. Now you got to find that for yourself. Is that $100? Is that $50? You got to find that for yourself and work from there. Because losing can't ever be eliminated, no matter how great you become. Losing can be reduced. Losing can be controlled. But losing can't be eliminated. It's a permanent part of the game. You understand? So if you can't eliminate them, you want them controllable. You want them to be like little mosquitoes. I mean, you know, mosquitoes are pretty deadly. That's a bad example, but I don't know if you guys know that mosquitoes are the deadliest thing on earth. I mean, far more than coronavirus or anything like that. It's crazy. Be careful of mosquitoes. But you want them to be like little gnats. They're annoying. I know. I don't mean be happy when you have a loss. All right. I wouldn't go that far, but you want to do 2 things. You want to do 2 things with your losses. You want to make sure they're like little tiny annoying gnats, but they're not debilitating. They're not something that you feel, man, how can I make this up? You don't want to feel like a loss set your whole trading day back. If you're experiencing losses like, I just ruined my whole trading day, you are not trading. That's not called proper trading. All right? So you want to make sure they're controlled to the level where they're annoying, but whatever, I'll make it back. Okay? The other thing you want to make sure is that the loss is just a mathematical, numerical loss, traders. You don't want to, you want to make sure, is this loss because I made an error? Or is this loss just because it's a mathematical fact that not every play can work? Those losses are here with us forever. The mistake losses you need to eradicate from your life. So those 2 things you're constantly doing. I make sure my losses are little tiny fleas. Annoying, but I can easily combat that. Goal number 2, make sure my loss was not a mistake. All right? Here's an example of a mistake. I buy this new high. And then my stop is here and I lose. Now you make sure that loss is not debilitating for you. And you also make sure, did I make a mistake? Yes, you made a mistake. What are you supposed to be doing on new highs? Taking profits, not buying. So that's an example of making sure your trade was a sound trade. Now see how fat red bars are are largely still being ignored? Now this is going to be your key for when the market is reverting back to normal again. When do you start to see fat red bars continue almost all the time? That's when you know, uh-oh. You can never pinpoint exactly. You have to see it for a while. And then after a while, you say, okay, we're back to normal now. But that's going to be one of your keys, the fat red bars. All right.